Hey everybody, welcome to the channel on this beautiful Sunday, and I just wanted to make a quick video about WBA stock, and this is a company that has really sold off quite dramatically from the peaks all the way down to $21 per share, and it's absolutely crazy. So when we're looking at this from a perspective of the opportunity, you look at a stock that used to trade north of $95 per share. That was the absolute peak, and now we're all the way down to $21 a share. So if you're looking at this from a perspective of, okay, I mean, this is hitting a trend line that we've not seen in quite some time. So $23 a share, $26 you'll see, $28. It's quite shocking that, in my opinion, a company like Walgreens, which is around my area, should not be trading at such a low valuation. And we have to ask ourselves, why is a stock like this trading at dividend yield of 9%? So for every $100 you invest, you'd put in $9 back in your pocket. Okay, so I just wonder, it's down 72%, and then you can look at some of the most recent news. Walgreens to settle Rite Aid investors' merger claims for $192 million. Walgreens Boots Alliance earnings call, it just not really anything shocking. Why is this stock down so much? And you're trying to find the answer. And really, this is a broader thing that's going on, not just with Walgreens stock, but also the dividend stocks, and a lot of these companies that are out there on the market right now have been absolutely collapsing in value. And why is that? Like, why is this all happening right before our eyes? And this is called Market Psychology 101. It doesn't really, take a genius to figure out that fear and greed are the two driving forces that drive the market. And this happens across the board. Now, in 2022, it was growth stocks. You had a lot of the growth companies, small cap names that were down big, and it just shows you where the fund flows are going. Okay, so these stocks, you can look at a stock like Newmont Mining is another one I've been talking about on this channel, just to show you it's not just Walgreens. This stock in particular is down, from the peaks. It used to trade at like $80, $90. Okay, we're down pretty low, $38 a share. We have Stag Industrial. I've talked about that one on this channel. This is going to be like the company that uses Amazon's warehouses and whatnot, trading at a peak of around $50. Now, this is a real estate investment trust, but it's still come down from the peaks. And, back in 2021, 2022, it wasn't just the dividend stocks, but it was also the growth stocks, the small cap stocks that were skyrocketing in value, absolutely insane valuations. Stocks were going up hundreds, thousands of percent in a very short period of time. That's not happening anymore. And so the liquidity has been sucked out of the market. And what's happening is you have a lot of these stocks that have collapsed in value as a result. So is Walgreens Boots Alliance a buy? I'm not giving a recommendation based upon your own risk tolerance and investing goals. That's what it comes down to. But a stock that's down 72% in the last year, if you think Walgreens is going to be around, I mean, they have 268,000 employees, revenue of $139 billion. You can consider this from your own risk tolerance and investing goals. Do you think Walgreens will still be around in the next, 5 years, 10 years? Do you think they'll still be a viable business? Do you think they'll be growing revenues over that time frame? I mean, it's quite shocking to me to see this down so much. And you can look at any number of factors, but really it's just fear and greed. There might be individual factors going on with this specific company, but in my personal opinion, I think Walgreens will probably be around. I mean, I see Walgreens everywhere I go. Around my area, there's probably like 3 Walgreens within a 10-mile radius, not even, so just something to keep in mind. I think Walgreens is going to be the dominant pharmacy. It already is pretty much, but I mean, like in terms of CVS and the other ones, I don't see a lot of CVS's. I mean, even the CVS that used to be here, one of them went out of business. And so I'm just looking at the market from an everyday consumer. Where do I shop? If I'm going to go to Walgreens, I'm going to go to, Walgreens if I need some kind of drug, prescription or something like that. I'm not going to go to CVS. I'm not going to go to these other drugstores. So just think about how you shop as a consumer. Where would you go? And do you think Walgreens will be around here? And do you think you're getting a good deal? 9% dividend yield. I mean, every $100 you invest, you're getting $9 back. So if you invest $100,000 into Walgreens stock, you're going to get $9,000 in passive income with the current yield. Now, that is subject to change, okay? So if we look at the most recent dividends, that is one thing we can look at. But this one used to trade, you can kind of look at the most recent dividends. I mean, you can see here, guys, they're still raising their dividend. Like, they have not cut their dividend, which is pretty incredible. You would think a stock that's down this much, something would be drastically wrong to where they'd be cutting their dividend. We have not seen that yet. Now, perhaps that happens, but nonetheless, it's still producing the, solid dividend as we speak. So just something to keep in mind, guys. Thanks so much for watching. Appreciate you tuning in. And with that being said, we will see you in the next video. Take care.